Right now, in the middle of Florida, homes are losing value faster than almost anywhere else in the entire United States. And most homeowners have no idea it's happening to them. Imagine buying a home for $500,000 only to watch it lose $50,000 in value in a single year. That's not a hypothetical. It's happening right now, in towns you've probably heard of. Places once considered the hottest real estate in the country. Sellers are panicking, buyers are hesitating, and in some towns, prices have fallen so far, so fast that entire neighborhoods are worth less today than they were 3 years ago. So what's really going on? Is this the start of a full-blown Florida housing crash, or just a painful correction before prices rebound? Stick with us, because by the end of this video, you'll know exactly which 12 towns are free-falling and what it means for you. The numbers ahead might genuinely shock you. Before we dive in, tell us in the comments, would you buy in Florida right now or run the other way? We spent real hours digging through the data just to bring you this video, so if it's helping you make sense of what's happening, hit subscribe. It's genuinely just one click, and it means more to this channel than you'd think. Number 1, Homosassa Springs. Let's start somewhere most people have never even heard of, because that's exactly what makes this story so unsettling. Homosassa Springs is a quiet, unassuming Gulf Coast community northwest of Tampa, the kind of place known more for manatees and slow rivers than real estate headlines. And yet, according to Realtor.com data reported by Florida Trend, it's one of just 9 Florida metro areas that saw a 5-digit drop in median home value over the past year. Think about that for a second. This isn't a flashy, overbuilt boomtown that got too big for its own good. This is a sleepy, small-town market, and it's still getting pulled down hard by the same statewide pressures hitting the rest of Florida. That tells you something important. This correction isn't isolated to a handful of overheated cities. It's systemic. Rising insurance premiums, growing inventory, and cooling buyer demand are reaching even the towns that never had a speculative bubble to begin with. If a quiet, under-the-radar market like Homosassa Springs is losing 5 figures in value, it's a signal that the pressure across Florida runs deeper than headlines about Miami condos or Cape Coral mansions suggest. Picture a modest 3-bedroom home along a quiet canal, the kind of place a retired couple bought for peace and quiet rather than investment returns. A year ago, it was worth thousands more than it is today. Not because anything changed about the house itself, but because the entire financial equation around owning a home in Florida shifted underneath it. Here's the practical takeaway. If you've been eyeing a quieter, lower-cost slice of the Gulf Coast, patience could genuinely pay off here. Prices in smaller markets like this often have more room to settle before they find a real floor, which means waiting a few more months could mean negotiating from a stronger position instead of rushing into a market that hasn't finished correcting yet. It's also worth remembering that towns like this rarely make national headlines, which means far fewer buyers are watching closely, giving patient shoppers an edge that bigger, more talked-about markets simply don't offer right now. Number 2, Deltona, Daytona Beach, Ormond Beach. Next up is a metro area that boomed for a very specific reason. It was the affordable alternative to Orlando. When Central Florida's biggest city got too expensive during the pandemic rush, buyers who wanted to stay close without paying Orlando prices flooded into Deltona, Daytona Beach, and Ormond Beach instead. Demand surged, prices climbed fast, and for a while this felt like the smart, budget-friendly move. Now that same metro area is one of the 9 Florida markets reporting a 5-digit drop in median home value over the past year, according to the same Realtor.com data cited by Florida Trend. Here's why that matters. When an area's price growth is built almost entirely on being the cheaper option next door to a bigger city, that growth is fragile. The moment migration patterns shift, whether it's remote workers returning to offices, retirees rethinking their budgets, or simply fewer people relocating to Florida altogether, the demand that pushed prices up can evaporate just as quickly. Deltona, Daytona Beach, Ormond Beach is a textbook example of that fragility playing out in real time. Imagine a young family who moved here in 2022 specifically because it was 30 minutes closer to affordable and still close enough to commute. Back then, it felt like a savvy financial decision. Today, that same decision looks a lot more uncertain as home values slide, and the math that justified the move starts to wobble. The practical takeaway here is simple. Don't panic if you already own here. The relative affordability compared to Orlando still holds. It's just resetting from an inflated peak to something closer to realistic. For buyers, though, this is a market where the commuter premium of the boom years is deflating, and that could mean real opportunity if you're patient enough to let it settle further. Keep an eye on Orlando's own price trends too, since this area's value is tied closely to its bigger neighbor. If Orlando cools further, expect the ripple effect here to continue for a while longer before either market truly stabilizes. Number 3. Lakeland Winter Haven. Lakeland Winter Haven earns its spot on this list for a very geographic reason. It sits almost perfectly between Tampa and Orlando, which made it a magnet for commuters chasing lower prices during the housing frenzy of 2020 through 2022. Adams specifically named this metro area as one of the Florida markets seeing price declines in early 2026, and it's not hard to see why once you understand how it got so hot in the first place. During the boom, Lakeland Winter Haven was marketed almost as a hidden gem, close enough to two major job hubs, but priced like a smaller, sleepier town. Buyers who couldn't stomach Tampa or Orlando prices poured in, and sellers happily rode the wave. But commuter-driven demand is only as strong as people's willingness to actually commute, and as remote work patterns shifted and gas and time costs became bigger considerations, some of that appeal started fading. Picture the daily reality. A 2-hour round-trip commute might have felt worth it when home prices were rising 15% a year. It feels a lot less worth it when those same prices are now falling and job flexibility has changed the calculation entirely. That's the quiet shift happening underneath the surface here. Now watch the inventory numbers closely if you're following this market, because rising supply in a former commuter hotspot is usually an early signal. It tends to mean there's more room for prices to soften before a real floor gets found. For buyers willing to be patient, this is a market where holding off a few more months could pay off in a stronger negotiating position, rather than jumping in while the correction is still actively playing out. And if remote work trends shift again in the coming year, don't be surprised if Lakeland Winter Haven becomes one of the first markets to react, given how tightly its recent growth was tied to commuter flexibility in the first place. It's a reminder that affordable and centrally located only stays attractive as long as the jobs people are commuting to actually require them to show up. Number 4. Port St. Lucie. Port St. Lucie's decline looks almost gentle compared to what's coming later on this list, but don't let that fool you into thinking nothing is happening here. The average home value currently sits around $390,625, down 3.4% over the past year. On its own, that number might not sound dramatic, but the story behind it says a lot about what's shifting across the entire state. Port St. Lucie was one of the biggest out-of-state buyer magnets during the pandemic boom, especially among retirees chasing sunshine, lower costs, and a slower pace of life. That steady inflow of buyers is exactly what pushed prices up so consistently for years. Now, as that migration wave slows down and fewer retirees are relocating at the same breakneck pace, prices are drifting gently back toward more sustainable levels rather than crashing outright. Picture a retired couple who sold their Northeast home at the peak of the market and bought here in 2022, expecting their new Florida home to keep appreciating the way it had for the previous buyers. Instead, they're now watching a slow, steady dip. Not alarming, but a clear signal that the easy money years of Florida real estate are behind them, at least for now. Here's the practical angle. A 3.4% dip is nowhere close to a crash. It's closer to a market catching its breath after years of unsustainable growth. If you already own here and love the area, this isn't necessarily a red flag worth losing sleep over. For buyers, it simply means you have a little more breathing room and negotiating power than you would have had 18 months ago, without the same volatility you'll see in some of the more dramatic markets further down this list. Think of Port St. Lucie as the calm middle of this story, proof that not every Florida correction has to be dramatic to still be worth paying attention to. It's the market on this list most likely to simply stabilize rather than swing sharply in either direction over the next year or two. Number 5. Ocala. Ocala is where this story gets genuinely strange, because the numbers seem to contradict each other. On one hand, Ocala posted the highest population growth rate of any metro area in the entire country over the past year, growing by 3.4%. More people are moving here than almost anywhere else in America. On the other hand, according to Realtor.com data, Ocala also recorded one of the biggest seller profit margin losses in the nation in the third quarter of 2025, second only to Punta Gorda, which we'll get to later. So how can a town be booming in population and collapsing in seller profits at the same time? The answer lies in supply. New construction and a flood of new listings appear to be outpacing even Ocala's impressive population growth, which means there simply aren't enough buyers to soak up all the new inventory hitting the market at once. It's a classic case of a market getting ahead of itself and now recalibrating even as demand technically keeps climbing. Picture new subdivisions rising out of former pasture land, home after home, going up to meet demand that builders were betting would keep accelerating forever. Now those same builders and the sellers competing against them are discovering that more people moving in doesn't automatically mean higher prices if supply is growing even faster. The practical takeaway is nuanced here. Ocala isn't a market in trouble in the traditional sense. It's a market correcting because it built too much, too fast. If you're a buyer, that oversupply is your leverage. If you're a seller, expect to compete hard against newer inventory and price accordingly rather than assuming the population boom alone will carry your listing. Watch the new construction numbers here specifically, because builders in fast-growing markets often keep pulling permits even after demand starts to soften, which can stretch the correction out longer than buyers expect. If you're weighing Ocala against a slower-growing town on this list, remember that population growth alone isn't a guarantee of rising prices. Supply matters just as much, if not more, in the long run. Number 6. Fort Lauderdale. Fort Lauderdale is where this list stops being about small pandemic boom towns and starts becoming a much bigger story. According to CBS News' coverage of a national 2026 housing forecast, homes around Cape Coral and Fort Lauderdale are projected to see the largest price declines in the entire country next year, with values expected to drop roughly 10.2%. That's not a sleepy retirement community or a hidden Gulf Coast gem. That's one of Florida's most established, most recognizable coastal cities. This matters because Fort Lauderdale making this list signals something bigger than isolated overbuilding. This is a mature, deeply developed metro area with decades of housing history behind it, not a town that exploded overnight during the pandemic. When a market this established starts projecting double-digit declines, it suggests the correction reaching Florida isn't confined to a few overheated Gulf Coast towns. It's spreading into the state's major, long-standing metro areas, too. Picture the Fort Lauderdale skyline, the yacht-lined canals, the waterfront condos that have defined South Florida luxury for generations. Even that image, the one Florida has sold to the world for decades, is now facing a real financial reckoning tied to insurance costs and shifting buyer confidence. Here's what this means practically. A projected decline of this size in a market this large is a meaningful shift in negotiating leverage. Buyers eyeing Fort Lauderdale should feel more comfortable pushing back on price and asking for concessions than they would have a year or two ago. Sellers, meanwhile, need to recognize that pricing strategies from 2022 simply won't work in 2026. Realistic pricing now matters more than ever in a market this exposed. And if you're watching Florida real estate from anywhere else in the country, Fort Lauderdale is the one to keep an eye on. Because what happens in a major established market like this often signals where the broader statewide correction is headed next. Established coastal cities rarely correct this sharply without the effects eventually showing up in neighboring markets too. Number 7. Sebastian Vero Beach. Along Florida's Treasure Coast, Sebastian Vero Beach is quietly posting one of the sharper corrections on the Atlantic side of the state. Median price here has dropped to roughly $386,190, down about 10.2% year over year, according to Newsweek's reporting on Florida Realtors data. That's a double-digit decline in a region that spent years being marketed as an under-the-radar alternative to pricier coastal towns further south. During the boom, Sebastian Vero Beach attracted buyers who wanted the Florida coastal lifestyle without paying Palm Beach or Naples prices. That demand pushed values up steadily for years, but it also meant the market was riding on comparative affordability rather than deep structural demand. When affordability itself becomes a challenge statewide, thanks to insurance costs and rising ownership expenses, markets that sold themselves on being the cheaper coastal option are often among the first to correct sharply. Picture a stretch of quiet beach towns, small marinas, and modest coastal homes that spent the pandemic years quietly climbing in value while bigger, flashier markets grabbed the headlines. Now that same quiet market is seeing one of the more dramatic pullbacks in the state, even though it never had the reputation of Naples or Cape Coral. The practical lesson here: double-digit corrections like this often overshoot a little before settling into a stable range, so it's worth watching a few more quarters of data before assuming the bottom has fully arrived. For buyers, that means there may be more room to negotiate ahead. For current owners, it's a reminder that even quieter coastal markets aren't immune once the broader affordability crisis takes hold across the state. If you're comparing coastal towns on this list, Sebastian Vero Beach is worth flagging as one to revisit in a few months, since corrections tied to affordability comparisons tend to move faster than ones tied to storm damage or condo regulations alone. This is a market that could genuinely stabilize sooner than some of the bigger names further down this list, simply because its problems are more about pricing than structural risk. Number 8. The Villages/Wildwood. If there's one entry on this list that should genuinely surprise you, it's this one. The Villages, arguably the most famous retirement community in the entire United States, is not immune. Median price in the Wildwood. The Villages area sits around $347,000, down 11.3% year over year. This is a community built almost entirely on steady, reliable retiree demand. Here's the practical angle. If retirement relocation has been on your radar, a double-digit correction in a historically rock-solid market like this is genuinely worth paying attention to. This isn't a struggling town with underlying problems. It's a beloved high-demand community simply resetting to more sustainable pricing. For patient buyers, that combination could represent one of the more interesting windows of opportunity on this entire list. And if a market this dependable is showing cracks, it's worth asking yourself what that says about towns further down this list that never had the Village's famously loyal built-in buyer base to begin with. If even this community is resetting, it's a strong signal the correction touches nearly every corner of the state, not just the flashy pandemic boomtowns everyone talks about. Number 9. Northport Sarasota Bradenton. Northport Sarasota Bradenton tells one of the most dramatic long-term stories on this list. Median price here sits around $475,000, down close to 9.9% depending on the exact data set, though some reports put the annual decline closer to 5 to 7.5%. But the real shock comes from the longer view. Prices here were reportedly 20% lower in August 2025 than they were just 3 years earlier, at the absolute peak of the pandemic boom. That 20% figure deserves a moment to sink in. This wasn't a market that grew steadily and then cooled off gently. It was a market that spiked to an extreme high and is now unwinding a huge chunk of that spike. When you hear prices are down, it's easy to assume something is broken. In this case, it's closer to gravity finally catching up with a market that arguably never should have climbed as high as it did in the first place. Picture new construction communities that sprang up seemingly overnight in 2021 and 2022, buyers competing in bidding wars for homes sight unseen, prices climbing by tens of thousands of dollars in a matter of months. That frenzy created a price ceiling that was always going to be difficult to sustain once demand normalized. The practical takeaway is important here. If you're comparing today's prices to the 2022 peak, you're comparing against an outlier, not a fair or realistic baseline. This market's current values are arguably closer to where a healthy, sustainable market should be than the inflated numbers from 3 years ago. For buyers, that means today's pricing may actually represent a more reasonable entry point than it first appears, especially compared to trying to compete during the bidding war frenzy of 2021 and 2022. For sellers who bought before the boom, it's also worth remembering that even after this correction, many homeowners here are still sitting on significant gains compared to pre-pandemic prices. Context that's easy to lose sight of when the headlines only focus on the drop. Number 10. Naples to Marco Island. Naples might be the most jaw-dropping entry on this entire list. A typical home here cost roughly $767,800 in May, down 19.2% from a year earlier. Let that sink in for a second. That's nearly a fifth of the home's value gone in just 12 months. in one of the most expensive, most prestigious markets in the entire state. This isn't a budget commuter town losing a little steam. This is luxury coastal real estate taking one of the hardest hits in the country. So what's driving a decline this severe in a market this exclusive? Part of the story traces back to Hurricane Ian, whose lingering impact on tourism and local jobs continues to ripple through the broader economy here years later. Add to that a wave of new condo safety regulations that flooded the market with inventory, right? As buyers were already growing cautious about storm risk and skyrocketing insurance premiums, and you get a perfect storm of downward pressure on prices. Picture waterfront condo towers along the Gulf, once symbols of untouchable Florida luxury, now sitting on the market for months as sellers slowly accept that the old pricing playbook no longer applies. Buyers who once competed fiercely for these units are now taking their time, running the insurance numbers carefully before making an offer. Here's the practical reality. Luxury coastal markets like Naples can fall harder and faster than the rest of the state because they're more exposed to condo regulation shifts and insurance shocks specifically. But they also tend to carry more resilient long-term demand once the correction fully plays out, which means this could be a rare window for buyers who've always wanted in but were priced out during the boom. Just be sure to factor in the ongoing condo association fees and inspection costs before assuming a lower price tag automatically means a better deal. Naples is a market where the sticker price is only part of the real story, and the fine print matters more here than almost anywhere else on this list. Number 11. Cape Coral to Fort Myers. If this whole video had to be summed up in one town, it would be Cape Coral. This is the market that keeps showing up at the very top of nearly every national list of falling home prices. And depending on the exact report and time window, prices here are down anywhere from 6% to over 10% year over year, with median values landing somewhere between $341,000 and $375,000. Compared to the pandemic peak in August 2022, the typical home here has dropped more than 13% in value. Cape Coral is essentially the poster child for the entire story we've been telling throughout this video. Known for its extensive canal system and its explosive growth during the remote work boom, this city became one of the single hottest housing markets in the entire country almost overnight. Out-of-state buyers, many of them relocating sight unseen, drove prices to levels that, in hindsight, were never going to be sustainable long-term. Picture the canals lined with newly built homes, boat docks, and for sale signs that used to disappear within days during the peak of the frenzy. Now those same signs sit for months, and price cuts have become a normal part of the listing process rather than a rare exception. The practical takeaway here is significant. If you're a buyer who got priced out of Cape Coral back in 2022, this is the single market to watch most closely on this entire list. The correction here is real, it's ongoing, and it's consistently ranked as the sharpest in the nation, which means the negotiating power has shifted dramatically in favor of buyers willing to be patient and do their homework on insurance costs before jumping in. Just don't expect the discount to last forever. Markets that fall this fast often attract bargain hunters eventually. And Cape Coral's underlying appeal, canals, sunshine, and all, hasn't actually gone anywhere. If you're seriously considering buying here, this may be one of the more time-sensitive opportunities on this entire list. Number 12, Punta Gorda. And here it is, the biggest mover on this entire list, and arguably the single clearest example of Florida's pandemic boom fully unwinding. Depending on the source, prices in Punta Gorda are down anywhere from around 8% to nearly 15% year over year, with one report placing the median at $325,000, down 14.5% from the previous year. Seller profit margins here collapsed from 88.3% down to just 58% in a single year, the second largest such drop anywhere in the entire country. Punta Gorda became a symbol of everything that defined pandemic-era Florida speculation, a small, charming canal-front city that suddenly found itself flooded with out-of-state buyers chasing waterfront living at what once seemed like bargain prices. That demand pushed values to extraordinary heights in an incredibly short window of time. Now that same city is unwinding just as fast as it rose, giving back a huge share of those gains almost as quickly as it gained them. Picture sailboats gently rocking in a marina, waterfront homes with private docks that once sparked bidding wars among buyers from across the country. Today, many of those same homes sit with price reductions stacking up, sellers slowly coming to terms with a market that has shifted dramatically beneath their feet. Here's the practical bottom line. If you're a buyer with patience, cash reserves, and a clear-eyed view of insurance costs, Punta Gorda is arguably the single most negotiable market on this entire list right now. This is a town where the gap between asking price and what buyers are actually willing to pay has never been wider. And for the right buyer, that gap could translate into a genuinely rare opportunity. Just remember why prices climb so high here in the first place, and go in with realistic expectations rather than assuming today's lower numbers are guaranteed to keep falling indefinitely. Of everything covered in this video, Punta Gorda is the clearest reminder that what goes up this fast in Florida can, in fact, come back down just as quickly. So there you have it, 12 Florida towns, from quiet, under-the-radar communities like Homosassa Springs, all the way to headline-grabbing markets like Cape Coral and Punta Gorda, all telling the same underlying story. The pandemic-era Florida housing boom is unwinding, town by town, in real time. Some of these declines are gentle corrections. Others are full-blown resets. But together, they paint a clear picture of a state recalibrating after years of unsustainable growth. Whether that's good news or bad news honestly depends entirely on where you're standing. If you're a buyer, this might be one of the most favorable windows Florida has offered in years. If you're a seller or current homeowner, it's a moment to stay informed rather than panic. Most of these towns are still worth more than they were before the pandemic even started. The question now is simple. Are you watching Florida's next chapter unfold from the sidelines, or are you ready to be part of it? If this breakdown helped you make sense of what's actually happening in Florida real estate, hit that like button. It genuinely helps this video reach more people trying to figure out the same thing. Subscribe so you don't miss our next deep dive, and drop a comment. Which of these 12 towns surprised you the most? Are you buying, selling, or just watching from a safe distance? And if you want more on where the housing market is headed next, check out our related video linked right here. We break down which U.S. cities are expected to see prices rise in 2026, so you can see the full picture, not just the Florida side.